Was really, really good. The idea that the narrative around what the Fed has been doing has shifted quite a bit just in a couple of months. But I do wonder, and look, I think she makes a really good point that if we start to see oil prices go up again, something completely out of the control of the Federal Reserve. It's a supply-demand issue here.
So they could crush demand.
They could, but
to the
they
point
can't
where
increase
you stay
supply.
Inside your house.
Yeah.
Yeah.
But you're still using electricity.
Yeah, that's true.
It's still summer then winter. So there's really only so much they can do.
They can't change the seasons?
Not yet.
Okay.
Not in this universe. Maybe in the metaverse, Katie.
Yeah, maybe we'll all be living there one day. But it was a really interesting point that Gina made, and this is something I think Joe Weisenthal wrote about a month ago, that basically the whole market is one big oil trade right now. We're all just tracking what oil is doing. It's informing inflation expectations, which is informing the Fed, and the Fed obviously is informing equities and everything else.
Yeah, even if we strip out energy and food, which are traditionally volatile, if we look at inflation, truly energy underpins everything that's in the report.
Yeah, and I mean, Powell said that himself, that you can't be too nuanced right now when you're dealing with the type of inflation that we're dealing with. No one is really paying attention to the nuances of core versus headline.
Yeah, that's a really good point. All right, we're going to have much more in just a few minutes. First, though, we get to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey there, Nance.
Thanks, Tim. Transportation Secretary Pete Buttigieg says $84 billion have already been dispersed for traffic improvements, electric charging stations, and other projects financed by the new infrastructure law. Buttigieg provided a briefing for House lawmakers today.
Republican Rick Crawford asked Buttigieg about the impact of inflation on infrastructure projects.
Cost containment is a major focus for us right now. The impact of cost escalation and inflation is unquestionably going to affect our ability to deliver. We're doing everything we can to ensure that projects move forward swiftly. The greater the rate of inflation, the greater the cost of delay.
Buttigieg also noted the reluctance of Congress to add budget dollars to the highway fund, which has long been financed by the federal gasoline tax. In Washington, Irv Chapman, Bloomberg Radio.
The witness list is set for the next primetime hearing of the House January 6th committee this Thursday. Bloomberg Government's Emily Wilkins.
Matt Pottinger, a former deputy national security advisor, and Sarah Matthews, a deputy press secretary, both of them resigned from the White House after the assault on the Capitol, meaning that they could have really an inside look at what was happening in the White House on January 6th.
Bloomberg Government's Emily Wilkins reports this may not be the committee's last hearing. Chairman Benny Thompson says due to new information streaming in, what was supposed to be a final report in September may now be a scaled-back interim report. Opening arguments are underway in Steve Bannon's contempt of Congress trial. He's charged with defying a subpoena from the January 6th committee. Today, he asked for a one-month trial delay, but that request was refused by the judge. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Katie Greifeld were live in the Bloomberg Interactive Brokers studio in New York. Katie, this story among the most read on the Bloomberg terminal, I should note it is a little disturbing because it goes into some details of a crash that killed 2 people. But a Tesla crash victim, mostly to blame for his death, a jury in Florida has found. This jury found that Tesla is just 1% responsible for the death of a teenager who crashed a Model S into a wall at high speed, concluding that the 18-year-old and his father were 99% to blame for the 2018 incident. Now, I'm no lawyer, but I was surprised when I read this story to find, Katie, that the jury had been asked to assign blame in a percentage basis.
Yeah, very bizarre. That caught my eye as well, and I'm sure it's raising eyebrows. But in any case, the family of Barrett Riley, they were seeking to prove that the company had played a role in his death. Service technicians had removed that speed limiting feature from the Model S. It had previously been installed at the request of his mother, but it was removed, and ultimately Barrett and his friend, they were sitting in the passenger seat. Both of them were 18. They were killed when he ultimately lost control of the vehicle at 116 miles per hour.
Tesla faces a spate of lawsuits and regulatory probes over accidents linked to its autopilot driver assistance feature. The first trial among those cases, that is scheduled for a couple months in Florida State Court in Palm Beach County. That's going to start in September. At least that's how it's scheduled right now. We should note that lawyers for Barrett's father, James Riley, had argued that Tesla should have gotten his authorization as the car's owner to remove the speed limiter, which was activated shortly after the teen got a ticket for going 112 miles per hour in a 50 mile per hour zone. The limiter was programmed to prevent the Model S from going faster than 85 miles per hour. Katie, I know you've been in a Tesla in the past, but one thing that's really surprising about them is just how fast they do go. And, in earlier years, you'd have to be in a supercar to accelerate at speed.
And you don't notice. I mean, when you put your foot on the pedal, it feels very smooth. Great acceleration.
Check out this story on the Bloomberg terminal and also at Bloomberg.com. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Broad-based rally underway. Stocks holding very close to session highs. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks climbing from the start today as the S&P 500 trades back above the 50-day moving average for the first time since April. Dow's currently up 700 points. S&P's gained 100, while NASDAQ is rising by 340. The U.S. 10-year yield at 3.01%. Gold is little change. Oil is climbing. And Bitcoin trading higher by 10%. Among the main 11 S&P sectors, all are in the green, led by gains in industrials, telecom, and financials. Leaders to the upside in the Dow, Goldman Sachs, Nike, and Boeing. Only IBM and J&J were in the red. After earnings, IBM did fall 5%. And in deal news, Veritas is in exclusive talks to buy NCR. In other news, the trial over the Musk Twitter buyout is set for October. And wrapping things up, Netflix reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Let's bring in Leah Nyland right now. She's an antitrust reporter for Bloomberg News. She joins us on the phone from Washington, D.C. Leah, you have a very interesting story on the terminal right now about Meta Platforms. Meta, formerly known as Facebook, has a bunch of different businesses, and it seems like that's a problem right now.
Yes, thanks so much for having me, Katie. So the House Judiciary Committee did an investigation into the largest tech platforms here in the U.S. a couple years ago ahead of some antitrust legislation that they have proposed that would sort of place limits on some of the things that online platforms can do when they have other smaller businesses that rely on them. And as part of this investigation into the platforms, they got a lot of documents from them, including this memo from Meta Platforms from 2018. And what was really interesting about this memo is it laid out some concerns Facebook had with the acquisitions it had made in 2012 of Instagram and 2014 with WhatsApp. And it turns out that Facebook really saw both of those, its own internal products, as the biggest competitor to Facebook, which sort of reiterates some claims by the Federal Trade Commission and other antitrust agencies around the world that Facebook is a monopoly in social networking and that it bought both of those products to sort of extend its monopoly.
So, Leah, for those who haven't been following this story as closely as you have, what has Facebook been saying externally over the years to defend its position and say, hey, we are not a monopolist?
Yeah, Meta and Facebook say, there are a lot of different apps and options for you. Facebook is not the only social media network that exists. There are things like Twitter, where you can go on. There's Pinterest, there's Snapchat, and now there's TikTok. TikTok is a really big one that they like to point out because it has become popular only over the past few years.
I just want to jump in because we should note that Facebook, when it was known as Facebook, tried to buy Snap years ago, right?
Yes, that was another thing that came out, as part of the this investigation the House Judiciary Committee did, which was that they had made several offers to buy Snap and had been rebuffed because Snap was one of the competitors that they were very worried about.
And so this memo, Meta turned it over voluntarily. I mean, is it safe to say that the company itself doesn't view it as a problem?
The company has said that it believes that there is sort of fierce competition in the social networking space. As I mentioned, the Federal Trade Commission has sued them, alleging they're a monopoly that should be broken up. In that case, they have said that they have something like 268 companies that they think are their competitors, and they intend to get a lot of documents and information to sort of prove that this is a competitive space. They did turn over this document voluntarily to the House, though the House would have had the ability to subpoena them if they didn't turn it over voluntarily. So
they do have the power in that situation. Leah, we are going to hear from Facebook after the market closes on July 27th. So we've got more than a week before we get to Facebook. But if we think about what it's been like over the last 2 quarters, it's been pretty ugly. The company's shares are down close to 50% so far this year, down even more if you look at the all-time highs reached back in the fall of last year. I wonder how lawmakers look at the company differently, or if they do look at the company differently, if it's in a different position right now, given that it's lost so much value, what do you think?
That is a very interesting question. The antitrust legislation that's currently pending has a threshold of a $550 billion market cap.
Oh my goodness.
All of the other main tech companies, Amazon, Apple, Microsoft, and Alphabet, are over that. Meta has now fallen below it. So there's a big question about whether they might want to change that cap, keep it where it is. There is another threshold they have in there for 1 billion users, and Facebook really clearly does meet that one. Same with TikTok.
So it could be said that the company is too small to be at least hit this threshold at this point at right now, or does the 1 billion users sort of put it over the edge? Like it has to be one or the other.
It's one or the other. So because it has 1 billion users, it still fits. Facebook is arguing, we have lost a lot of value over the past year, and that should sort of get them out of it. But.
And Leah, I mean, existentially speaking, would it be the worst thing in the world for Meta if, say Instagram or WhatsApp did outpace Facebook? I mean, is this just optics that, this is their sort of flagship company, that they don't want Facebook to fall behind?
That's a really interesting question. They have focused a lot internally on making sure that Facebook, the main Facebook site and Facebook Messenger, continue to grow. Facebook for the first time has started to see a decline in users, whereas Instagram is still growing. I think, Facebook is their flagship product. It's the one that has the most sort of lucrative advertisements, even so they're a little bit hesitant to sort of shift gears, though they are now starting to focus on their new, the metaverse and how they can sort of position to that going forward.
Well, it's a great story and a lot to think about in terms of Facebook's future and what regulators think about it. As I say all the time, Leah, the one thing Democrats and Republicans can agree on in Congress is like quote unquote reining in big tech, and Facebook certainly falls under that definition for them. Leah Nyland, antitrust reporter for Bloomberg News, joining us on the phone from Washington, D.C. Katie, are you a big Facebook user?
I'm a huge Facebook user, actually. Just the Messenger app, though.
Really?
Yeah.
This is like...
my husband and I, we don't text. We only use Facebook Messenger.
That's incredible.
That's been the case since 2011. And
that's
I hope it never goes away. We lose a decade of
your
communication.
history.
I know.
Wow. Okay, you learned it here first. Katie uses Messenger. Thanks for joining us. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenivek and Katie Greifeld live in the Bloomberg Interactive Broker Studio. Shares of Twitter higher by 2.9% right now. They did spike higher just before 1 p.m. when the redhead crossed the Bloomberg terminal. Twitter trial over Musk buyout is set for October. So right now, Twitter 1, Elon Musk 0. We're going to dive into that with Kurt Wagner, tech reporter for Bloomberg News, in just a minute. First, though, Charlie Pellet, less than a half hour to go.
Indeed, we do have U.S. stocks trading at session highs. Right to the numbers with the S&P now up 102, higher by 2.7%. 39.31, I should say, on the S&P. The Dow is up 694 points, up 2.2%. NASDAQ up 336, up by 3%. NASDAQ 100 index also higher now by about 3%. Russell 2000 index of small cap shares up by 3.4%. Bottom line here, stocks extending gains as investors assess the outlook for earnings amid speculation. Disappointments may already be priced into markets. All 11 industry groups are moving higher. Spot gold up 0.2%, $17.11 the ounce. Bitcoin surging 9.6% now, 23,542 on Bitcoin. The 10-year yield 3.00%. We've got the 2-year yield 3.22%. West Texas Intermediate crude up 1.4%, 104.03 a barrel. Just under 30 minutes to go until we get the latest numbers out of Netflix, with subscriber numbers very much in focus. Geetha Raghunatham is a media analyst with Bloomberg Intelligence.
After that bombshell quarter, in 1Q, sentiment has been super negative. Conviction is low. So this is really going to be another wait-and-watch quarter because, visibility is really, really low. You have, soaring inflation, you have an impending recession, you have the stronger dollar, and then you have this post-pandemic normalization amid all of this rising streaming competition. So it's just the perfect storm of headwinds right now for Netflix.
So Netflix, the coming attraction, will give you all the reviews as those numbers break shortly after 4 o'clock Wall Street time. IBM shares down the most in almost 9 months after earnings. IBM down now by 5.6%. Also after earnings, Lockheed Martin up 0.1%. Johnson & Johnson down 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Let's talk about Twitter. I'm on Twitter right now, and it seems like Twitter set for an early win. A judge ruled Tuesday that they can fast-track the lawsuit against billionaire Elon Musk. This 5-day trial should take place in October. Let's talk about that with Kurt Wagner. He is technology reporter for Bloomberg News. He joins us on the phone from San Francisco. Kurt, great to have you with us. Tell us why this is a win necessarily for Twitter.
Well, it's much more aligned with the schedule and the timeline that Twitter was pushing for, right? So when they filed this lawsuit, they had asked for a 4-day trial sometime in September, which would have been only about 2 months away. And Elon Musk and his lawyers, meanwhile, were asking to push things all the way till February. And so the fact that the judge said, we're going to, go to the trial in October, much closer to the timeline Twitter wants, I just think it's a sign that, she was very receptive to Twitter's arguments and clearly found that the company had good reason to want to move this up.
It was interesting, Kurt. We saw Twitter shares spike after this news broke. They've since returned to where they were just before the news broke. I'm wondering what it means for the future of the company. Can we read the tea leaves at all?
Well, again, kind of speculating here, right?
No, I'm sorry. You have to look into your crystal ball, but it's like, who knows,
that's
right?
Okay. Trust me, I've been doing it. I just have to caveat that, I respect. I can change my mind next week. No, I just think that the judge finding Twitter's argument compelling here, I think is really important, right? Because I think it just sends a signal that Twitter is arguing a strong case. And, I realize this is just a setting of the trial date, but in their motion to set the trial date, they included a lot of the details about the case, including the bot issue, right? So they're already kind of starting to make their case here And so, again, the fact that the judge found their case compelling, I just think it might be symbolic it's a preview maybe of what we're going to see moving forward.
And tell us what Musk and his team had been pushing for in terms of a date.
Yeah, they had hoped to do this sometime in February, and their reasoning was, they want to do a bunch of depositions. They feel like they need to get a lot more data and information from Twitter. They were kind of framing this as Twitter trying to rush this thing through. Twitter's argument was, this is going to be damaging to our business, right? The longer that this thing kind of hovers over the company, the longer that we live in this limbo, just the harder it's going to be for the company to recover or to have success. And that's what ultimately the judge agreed with.
Well, give us an idea of how employees are faring at the company, Kurt, because you and your colleagues at Bloomberg News have done a lot of reporting about this company being in limbo at this time. I mean, it's remarkable to see Elon Musk, the Twitter board, at odds, then in agreement, inviting him to address the company, then at odds once again.
Yeah, I mean, it's been a real back and forth roller coaster for employees, right? And on top of all that, you've had the other kind of tough things that a lot of companies are going through right now, like hiring freeze. There's been some layoffs. There's been top executives who have been fired. That kind of stuff would kind of be distracting and chaotic on its own without all of the Elon acquisition stuff happening. And so I do think if you're an employee there, first of all, you don't know who your boss is going to be in 6 months. And second of all, it's hard to plan your future, right? It's hard to say, hey, this is the product I want to work on for the next year, because you don't know if it's going to be relevant.
I mean, Kurt, I think it's like, is it hard for you to plan your future covering this story?
I can barely plan my weekend. Covering this story.
Well, here's one thing we always know, right? Friday at 5 p.m., some sort of news is going to break.
It's super convenient, right? Exactly when I would prefer to be tied to my laptop is Fridays at 5 p.m. So it's really nice of them to schedule it that way.
Well, hey, we got 30 seconds left with you. Just help us move this story forward a little bit and give us not a prediction, but an understanding of what we should watch for as this plays out over the next couple of months.
Sure. Well, very short term, a trial date. We know it's going to be in October, but both sides are supposed to work with the judge to come up with an actual date. So hopefully we'll get that soon. And then besides that, we're going to start seeing them to lay out their arguments. And we've already seen some of that, of course, but I think we're going to see more of it. And this is all going to build, right? And potentially there could be a settlement sometime between now and then, but it really does feel like everyone's ready to go to battle in court right now.
You got that ticket yet to Delaware, Kurt?
I was just talking with my editors about it today. I think, who knows, you may be talking to me from Delaware in a few months.
All right, that Chancery Court, it moves quickly. Unfortunately, we got Kurt Wagner keeping a close eye on that. And, of course, the Twitter and Elon Musk story. Kurt Wagner, technology reporter for Bloomberg News, joining us this afternoon on the phone from San Francisco. Once again, Twitter shares, spiking a little earlier in the day, but now higher by just 3%. And I say just, although it is outperforming the market. Let's get to Washington, D.C. for a check latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. It's never been so hot in the UK, with British forecasters saying they've shattered the record for highest temperature ever registered at 104 degrees. Teacher Robin Monroe is among those tolerating the searing heat in London.
I'm pretty desperate. I mean, there is sweat running down everybody's backs, and it's hot.
A large portion of the U.S. is also dealing with scorching heat, and climatologists are warning with global warming, this will be the new normal. Signs of climate change are growing, and President Biden is said to be weighing whether to declare an emergency that would allow him to steer funding to clean energy projects. House lawmakers are assessing the implementation of the massive infrastructure bill that President Biden signed into law late last year. They heard today from Transportation Secretary Pete Buttigieg.
My department has never seen a moment of greater potential than now to build transportation resources that connect everyone safely, efficiently, and affordably.
Buttigieg calls the program transformative. Missouri Republican Sam Graves says he's concerned about the soaring cost of projects with rising inflation. Bill de Blasio, the former mayor of New York City, abruptly ended his campaign for Congress today, saying on Twitter, voters were clearly looking for another option. Polls had shown him struggling in a race of a dozen other candidates. Global news 24 hours a day. on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Katie Greifeld were live in the Bloomberg Interactive Brokers studio. Katie, I haven't been outside since like 8-something this morning. It wasn't that bad here in New York, but then a couple hours later, somebody walked by my desk and they were like, it is so hot outside.
It's, you know what gets you though?
What?
It's the humidity. It is super humid. It's awful. I did go outside today.
You did. I know you did. But it's no laughing matter here in New York or around the world. Let's start with the coverage of Europe, because it's been just brutal there in recent days. Temperatures in the UK, Katie, rising above 40 degrees Celsius. That's 104 degrees Fahrenheit for the first time as a potentially deadly heat wave nears a peak on Tuesday. Okay, the temp at London's Heathrow Airport hit 40.2 degrees Celsius at about 12:50 p.m. That's according to a provisional recording published by the UK's Met Office. Temperatures across England are breaking the previous record of 38.7 Celsius set at the Cambridge Botanic Garden in 2019.
When are we going to get Celsius Fahrenheit parity? Because I don't
Never. It doesn't change.
It's a joke, Tim.
Okay.
It's a joke.
Multiply by 9/5 and add 32.
Okay, all right. Give me 5 minutes.
Okay.
I'll get back to you. But super hot in the UK, super hot in New York as well. If you look at what's expected this weekend, temperatures in Central Park forecast to reach 93 degrees Fahrenheit, that's 34 degrees Celsius on Tuesday, and remain in the 90s throughout the weekend. So it's hot all over the world.
It is. The difference between Europe and the United States, though, is the lack of air conditioning.
Yes.
I was on a call with some colleagues based in the UK earlier today, and I said, how many people do you know who have air conditioning in their homes? They said none.
That's nuts.
It's a completely different world. And to be fair, one of my colleagues did remind me that a lot of the homes built, hundreds of years ago that people do live in, they have very thick walls, so they do a good job of keeping the temperature consistent. But still, he's keeping himself cool with fans right now.
That's good.
It's brutal.
Yeah.
Brutal there.
I'm going to Oregon this weekend, the Pacific Northwest.
What's
I'm
the weather
super
forecast?
Excited. Not 93 degrees, I'll tell you that.
That's
Yeah.
good.
All right.
More discussion of the weather in just a few minutes. Tim Stenovec and Katie Greifeld. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Sharp contrast to this time yesterday. We're actually seeing buying into the close. Best level of the session right now for the S&P, up 108, up now by 2.8%. The Dow is surging 755 points, up by 2.4%. NASDAQ up 353, up 3.1%. The NASDAQ 100 index up almost 3.2%. The Russell 2000 up by 3.5%. S&P on track for its best day in more than 3 weeks. All 11 industry groups are rising in the S&P. 10-year yield right now 3.01%. The 2-year yield 3.22%. Spot gold up 0.1%, $17.11 the ounce. And West Texas Intermediate crude above 104 a barrel, 104.05 right now, up by 1.4%. We are now minutes away from the latest earnings report out of Netflix. Ahead of earnings, Netflix surging now by 5%. Recapping, S&P up 2.8%. Best level of the day. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Yeah, quite a rally today. Thanks so much for that update, Charlie Pellet. This is Bloomberg. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. President Joe Biden's efforts to tackle surging inflation, driven in part by high energy costs, are demanding more flexibility than he might have wished. His recent meeting with Mohammed bin Salman, the de facto ruler of Saudi Arabia, was arranged in hopes of boosting global oil production. Biden is also apparently relaxing his previously firm opposition to certain new fossil fuel projects in the U.S. The economic stresses caused by Russia's war on Ukraine do demand a pragmatic rebalancing of policy priorities, but this should not jeopardize the administration's climate change goals. Indeed, the current emergency only strengthens the case for a faster transition away from fossil fuels. Strengthening energy security and fighting climate change can and must go together. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, well, we are already there, shy of 10 minutes from the market closing. As we heard from Charlie Pellet, we are near our best levels of the day. The NASDAQ surpassing 3%, the S&P 500 higher by more than 2.7%. Really eager to hear what John Barranco has to think. He's Chief Investment Officer of Fundamental Investments at Allspring Global Investments. They've got about $540 billion in assets under management. John joins us this afternoon from Menominee, Falls, Wisconsin. Menominee, excuse me, John. Apologies to everyone in Wisconsin. John, how are you?
I'm doing fine, Tim. Thank you.
It's good to have you with us. Give us an idea of how to read into a rally like this, because earlier in the program, I was on the show saying that, asking the question to Katie, is the worst behind us? And a listener got in touch and was like, listed off all the reasons why it's not. Stubbornly high inflation.
Why you were wrong.
Why I was wrong. Yeah, I read it out loud to Katie. We haven't started the balance sheet unwinding yet. We haven't even had layoffs. Where do you think we are?
Well, it certainly is nice to have a relief rally and to have my screen green today. I would say that the market, I think, is in a show-me state, and we've gone through pretty extensive periods here where we've had a lot of bad news, and I would say excess is taken out of the system in areas like certainly equity multiples and zero interest rate environments and cryptocurrency and the backing out of central bank stimulus. And so, I think we're in a transition period here, and then the market really is in need of evidence, really. And I think evidence that inflation is peaking, evidence that, we're moving down a path of hopefully towards a soft landing relative to a recessionary outlook. But it's a tough time right now for sure. It's a period where there's a lot of uncertainty. But I think also to your earlier point, certainly a lot of opportunity as well.
Mm-hmm. And in this sort of transition period, I mean, a trend that I've been noticing, just zooming out from today's action in particular, is that it seems like there's this real hunt for income, that people are trying to add income versus just going after equities and taking a more cross-asset view when it comes to portfolio allocation. And I'm coming at it from the ETF side of things because that's what I cover in my day job. And just the number of filings of income-focused funds has been really interesting to watch. And I'm curious whether that's top of mind for you as well as the chief investment officer.
I think it is. It's certainly with the rate environment, moving higher, it's created a great opportunity for, locking in income, especially for investors who are willing to hold bonds to maturity at the short end of the spectrum. I also think that that income flow with respect to equity income provides, a level of stability as it relates to, kind of future returns. And typically companies that are paying, strong and growing dividend yields are those that are, financially in a good place right now. And so, as you look at migrating through, a challenging economic environment, I think companies that are in a position where they have strong balance sheets and really can navigate a world where the cost of capital is rising are going to be in the best position going forward. And oftentimes those are the ones that are paying the kind of dividends that are attractive to investors.
Hey, John, I want to get to your thoughts on earnings and what we've heard from companies thus far. We're really at the beginning of earnings season with just a handful of companies having reported. But those companies have been banks. So obviously really important bellwethers to get an understanding of what consumers are doing here in the United States, the health of the consumer. What do we need to be looking for in terms of commentary from companies that report in the coming days and weeks? We got Netflix in just a few minutes.
Yeah, I think, one of the things that we've seen so far is that earnings have, while they haven't been great, they haven't been all that bad either. And so, I think that, corporations over the last few years have really taken the advantage to lock in, their cost of capital for longer periods of time and have a little bit more balance sheet flexibility than they've had before. And clearly, as we move forward here, I think it's really important to look at, ultimately what CEOs are saying, not only in terms of how they're returning capital to shareholders and how they're guiding going forward with respect to issues like CapEx spending and the capital buffers on their balance sheet. I think that's going to be a great bellwether for ultimately how they see the economic picture in the future. But we do need to pay attention to how they're guiding as we move forward. And I do think that one of the things that probably will manifest itself as we work our way through earnings season is the street's estimates, which I think are quite high at this point, will probably have to come down a little bit.
Mm-hmm, mm-hmm. Yeah, and that's definitely a theme that we've been watching. The fact that sort of the expectations heading into this earnings season are very lofty. But John, we've seen this real sort of drawdown across markets, seeing a bit of a bounce today. But I'm curious, when you look at sort of the carnage that's been the equity market for much of the past 6 or 7 months. I mean, where do you think is oversold right now? Where do you think the opportunities are?
It's a market where almost all risk assets have sold off, right? And so we're in a period here where there really hasn't been many places to hide, even with cash, right? You've got inflation tracking at 9.1%, and so that's not a great place to hold assets as well. And so, but I do think the risk reward in the equity market is starting to get more attractive. We've had the multiples of the market go from 23 times to roughly around 15 times, and as you start to look at those companies that are more attractive. I do think it is those that do have flexibility on their balance sheets, as I talked about before. Those that really are in a position to return capital to investors and ultimately provide that visibility as we move forward.
John, we're going to have to leave it there. Really appreciate you taking the time. John Baranko, Chief Investment Officer of Fundamental Investments, joining us from Allspring Global Investments. They've got $540 billion in assets under management. We are just under 3 minutes away from the market close on this Tuesday afternoon. Don't go anywhere, though, because coming up next, it's our countdown to the close, our Beyond the Bell, with our colleagues from Bloomberg TV on radio, on YouTube, and on Bloomberg TV. This is Bloomberg Business Week, and this is Bloomberg Radio.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about just 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Gina Martin-Adams, counting you down to the closing bell, counting you down to the earnings, here to take us beyond that bell and to Netflix for the global simulcast. And it's Tim Stenovic, Katie Greifeld in for Carol Massa, and bringing together our TV, radio, and YouTube audiences as we do each day to dissect what has been a pretty risk-on kind of a day, Tim.
Yeah, I mean, all 11 industry groups are higher today. I think it's fair to call this one broad-based, Caroline. And the fact is, Katie, we're actually seeing above-average volumes compared with the last 20 days. So what gives?
Volumes up, stocks up, volatility down. You look at the VIX right now, below 25, just grinding lower and lower, really as stocks rebound.
Well, let's just enjoy the rebound. But let's not question it. Taylor already threw a little cold water on it by telling me that the last time we had a big rebound like this was just in June. But nonetheless, it does look pretty broad-based. It does look to be led by cyclical sectors with defensive sort of lagging, but basically every stock up. And that's usually a pretty solid sign of some risk tolerance reemerging.
I think what's interesting, though, we'll give a big shout out to Gina. The last time we had her on the last quarterly earnings season, the market fell apart, and I looked at her and I said, what happened? She said, tech quarterly earnings is what happened. This, Caroline, sets us up to sort of the beginning of Netflix today, further out this week as well as some of the others about how we're thinking about sentiment in this market.
The Teslas, the Twitters, we've already had the banks, and of course, actually, notably did relatively well. And we really get a mixed bag when you look at what happened with IBM. It beat, but the dollar worries really hit free cash flow, and that sent the shares lower. J&J, too, I won't steal people's thunder because I know they'll be talking about these stocks, but overall, 12 seconds to go, the cheers are occurring over on the NYSE and the NASDAQ, and the S&P 500 is up more than 100 points. We don't see that too often in a moment. We're currently up 2.7% on the S&P 500 as we start to settle out this day. The NASDAQ is up 353 points, more than 3%. No wonder they're cheering so hard. We're also looking at the Dow Jones, seeing a day of 750 point higher, solid day, 2.4%. We are already, it looks like, starting to get a drip feed of Netflix earnings, and it sees a third quarter streaming paid net change of up 1 million. That is a big miss for its forecast. In terms of its third quarter streaming paid net change, they see just 1 million increase. The market wanted to see 1.8 million. For their second quarter, streaming actually came in better than expected. It didn't fall as much as had been hoped, had been worrying about. We saw 970,000 losses in terms of people actually paying for their Netflix subscription. The market had thought it would fall off by 2 million. This is a very mixed bag. No wonder the market now, after hours, seeing a 9% pop because they are breathing a sigh of relief on what the second quarter brought us. But what about that forecast overall? And what about, they say they're going to be seeing a foreign exchange impact that was worse than expected. That's all about the dollar. Re-accelerating revenue growth is a big challenge, they say. Interestingly, they're doing a deal acquiring an animation studio, Animal Logic. There are no terms there. They're going to be funding the deal with existing cash balances. But overall, they saw a $339 million foreign currency impact. Again, this is talking also about Stranger Things. The content for had 1.3 billion hours viewed the first 4 weeks. That's on you, team. That is on the people out there spending 1.3 billion of their time on Stranger Things for Taylor.
And you hear this from the CEO saying that both of our challenge and our opportunity, we have to re-accelerate revenue and membership growth. We have to improve our product, our content, and our marketing, and we have to monetize our big audience. And Gina, not only getting to some of the FX headwinds that they also cite in parentheses what it would have been on a constant currency basis, and we're seeing signals of that through all of the quarterly earnings, but again, sort of thinking about the challenges and the opportunities, how do you think about sort of the monetization of what this company has to do?
Yeah, and I do think it is about the outlook. So pretty big beat, really, on second quarter, but they had guided so low that the market was already anticipating something of a beat. How will they overcome the subscriber losses ultimately in an environment where the competition, as we just talked about, the competition is so very fierce? I think that one of their struggles is going to be over the next couple of quarters really proving to have some sort of sustainable margin as well. And they've kind of guided the investment community to expect better margin going forward. How will they create that with this constant subscriber loss when you're looking at next quarter's subscriber loss still roughly equal to the current quarter's subscriber loss? It's not a good sign of the sustainability of margins going forward.
We can get more on that, all the fundamentals. Geetha Ranganathan, of course, our U.S. media analyst, joining us now here from Bloomberg Intelligence. Geetha, a market right now in post-market trying to weigh better than expected second quarter, but a third quarter that doesn't look great either. How are you weighing these results?
Yeah, there's really not a whole lot to cheer about, Taylor. I mean, yes, it was not as bad as feared for the second quarter. I think a lot of that we can owe that to, the success of Stranger Things. They were pretty good in kind of, spreading that out also over 2 quarters. So, maybe churn would be a little bit controlled because of that. But then again, you look at the third quarter guide, that's not reflecting a whole lot of optimism. So, we were looking for about 2 million. We're only at about 1 million. And there's really, I think, what the market is really looking for at this point of time is really some clarity, not just on the subscriber growth trajectory, but also on other metrics. So, how are they going to drive ARPU? How are they going to drive margins? I mean, Gina just spoke about that. And you look at the margin guidance for the third quarter, it's 16%. So well below the 19 to 20% that they were, that they're guiding to for the full year. And so there's pressure all around, top line, bottom line, subscribers, everywhere.
The company, Geetha, has made a lot of changes in the most recent quarter. They cut costs, they laid people off. The company now planning to introduce this lower-priced, ad-supported version of the service. How does the company do this in a way that doesn't cannibalize people who are paying for that ad-free tier? And then essentially what they're doing is they're trading down for a less expensive version, but might not be as profitable for the company.
Yeah, so this has kind of been a real, head scratcher, and it's this is why people are unable to get too excited about this right now unless we have all of the details. So remember, advertising is not in Netflix's DNA. This is something they have to build from scratch. And yes, you're absolutely right, Tim. They are going to be trading down, and yes, cannibalization is a huge, huge concern. But at the same time, they do have a lot of positives working in their favor. They are the largest streaming platform in the world. They do have 220 million subscribers across the globe, and they do have an average household spending over 2 hours per day on their platform. And that is what advertisers are looking for. They're looking for eyeballs, and they're looking for that constant engagement. And so the thinking is that they should be able to charge ad prices that are pretty robust. So if a Roku, if a Hulu right now is charging, let's say, $30, $40 CPMs, Netflix should be eventually able to charge maybe even 50% above that, just kind of given the quality of the audience and what they can offer advertisers. And so the general thinking is that their overall ARPU, even though the price is going to be lower, just the amount that they can get with advertisers would actually lead them to have, a total ARPU which is higher than a standard plan. So in the US, it costs about $15.50. Maybe with the advertising element introduced, they can get about $17. So they're not really going to be sacrificing unit economics.
And Geetha, when it comes to what drives eyeballs, theoretically, it's the content. I'm sure we would all like to believe that. And in terms of the content pipeline at Netflix, I mean, is it robust enough to necessarily reverse what we're seeing in terms of subscriptions?
It is pretty robust. So, we have the Gray Man that's coming out. It's supposed to be their biggest film ever, the costliest film ever, I should say. They do have new series coming out as well. You have Sandman, you have The Crown coming in later. There are a lot of different films. So yes, they do have a content pipeline that seems reasonably good, but reasonably good is not good enough anymore because you have all the competitors who are also coming out with their huge content releases, whether it's a Disney that's ramping up big time, whether it's an Amazon that's doubling down on sports with Thursday Night Football and with this new Lord of the Rings series, which is arguably the most expensive series ever created in television and streaming history, or whether it's, a Game of Thrones prequel. So everybody is going after that sub. And in this environment where it's, there's so many challenges with inflation, with recession, you really have to take some, you have to have those big hits and you have to have a steady stream of big hits. And that's really what the market is going to be looking for, any clarity around their content strategy.
Really appreciate your time and instant analysis as always. Geetha Ranganathan, U.S. media analyst here for Bloomberg Intelligence. Carol, as we digest a lot here, Katie, I should say, my apologies. Katie's, we digest a lot of just sort of all of these numbers here and really think about what this means, not only on some of the free cash flow, some of the currency issues, but again, content, eyeballs, content does continue to remain king.
Absolutely. I would hope so. And I will just say I've been called a lot worse than Carol. And if you sort of weigh what we learned today, what we saw from the company, if you look at what's happening after hours in the shares, Netflix shares up over 6%. So it was kind of a mixed bag, but net, at least the knee-jerk reaction is pretty positive.
Yeah, you have to wonder if investors are right now asking themselves, is the worst behind it for Netflix? After all, the company is going to return to growth, at least in this quarter, saying that it's going to add 1 million members. But, a very expensive quarter for the company with those severance charges and the revamp that they're trying to do internally. Well, that is going to do it for our cross-platform coverage on radio, TV, and on YouTube. We are going to be back here tomorrow at the same time, same place.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Hey, it's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio. Okay, let's go do some highlights here just in the 30 seconds that we have, Katie. Netflix shares higher in the after hours by about 6% right now. Stranger Things getting 1.3 billion hours of views. We did see shares jump after results. Revenue came in a little shy, about $8 billion. So estimates were for $8.04 billion. Earnings per share coming in above expectations at $3.20. The estimate was for $2.91. Streaming paid net change declines of 970,000. So a sigh of relief from investors who were expecting a net change of negative 2 million. So that would be 2 million subscriber losses. More on Netflix in a few minutes. First, though, to Washington, D.C. we go for World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. The House is taking up bills to make same-sex marriage permanently legal and contraception nationally available, which may soon be contested before the Supreme Court.
Judiciary Committee Chairman Gerald Nadler introduced the first of the bills.
The Respect for Marriage Act would reaffirm that marriage equality is and must remain the law of the land.
Ranking Republican Jim Jordan.
We thought the Democrats were obsessed with President Trump, but Justice Thomas is a close second. This bill is simply the latest installment of the Democrats' campaign to delegitimize and attempt to intimidate the United States Supreme Court.
Jordan said same-sex marriage and contraception are not impacted by the abortion decision, the court majority wrote. In Washington, Irv Chapman, Bloomberg Radio.
The nation's leading infectious disease expert is clarifying today he does not plan to retire at the end of President Biden's term. It had been widely reported Dr. Anthony Fauci would leave then. At the Hill's Future of Healthcare Summit today, he further explained his plans.
I'm not going to retire. I may step down from my current position at some time.
Fauci says he does not know where the term retirement came from. President Biden will be heading to Massachusetts tomorrow to promote his efforts to combat climate change. He's been under pressure to issue a national emergency after Senator Joe Manchin pulled out of climate negotiations. 2 court defeats today for 2 high-profile individuals. Elon Musk today lost his push to delay his Twitter trial, and former Trump advisor Steve Bannon lost his request for a 1-month delay in his contempt of Congress trial. Opening arguments have already begun in Bannon's case. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenivek and Katie Greifeld live in the Bloomberg Interactive Brokers studio. Katie, we're still digging through these Netflix earnings. Shares higher by 6.7%. The company is saying in its letter to investors that its share of TV viewing grew to an all-time high of 7.7% in June. As a reminder, Netflix doesn't just consider what's on TV, its competitors. It also considers things like TikTok and video games, basically anything that people do other than watch Netflix as its competitors.
I have to say, oftentimes when I'm watching Netflix, I'm also on TikTok at the same time. So
you got to watch better content that doesn't make you look at your phone.
Yeah.
You like TikTok, don't you?
I love TikTok. I don't love that I love TikTok, but I understand why, places such as Netflix, places such as Meta are worried. It is addictive.
Yeah, it really is. I got to delete it from my phone and stay away from it. Other streaming companies are higher in after hours right now as a result of Netflix's quarter. Disney is up 1.4% post-market. Roku, the video streaming platform and device maker, is up 2.5%. Let's talk about what the company is set to see as it looks forward to the current quarter. The third quarter that we're in, the company guided a little light on the top line, Katie. Revenue for $7.8 billion versus estimates of $8.1 billion. And then earnings also coming in light. That earnings per share number for the current quarter, $2.14. Investors expected $2.72.
Also, we got some deal news. Netflix deepening its commitment to animation. It announced the acquisition of animation studio Animal Logic, its partner already on several films. Terms of the deal not disclosed, but we do know that Animal Logic has around 800 employees, mostly in Sydney and Vancouver.
Jerry Smith from our media team writing that Netflix continues to lose subscribers in the U.S. and Canada, yet revenue is increasing thanks to price increases. In the region, revenue rose 10% year over year in the second quarter, while the company lost 1.3 million subscribers. The company saying in a statement, quote, retention improved over the course of the quarter, and while churn remains slightly elevated, it's now back to pre-price change levels. More on Netflix in just a few minutes. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Netflix getting positive reviews after hours, up now by 8% after losing more than 1 million customers in the first half of this year. Netflix has a message for investors. It could have been worse. The leader in paid streaming TV said it lost 970,000 subscribers in the second quarter. That was less than half of what Wall Street had feared. Again, Netflix now up by 8.13% after hours. Stocks surged today. The Dow, the S&P, and NASDAQ all pushed higher. S&P had its best day in 3 weeks, up 105 points today, up by about 2.8%. The Dow was up 754, up 2.4%. NASDAQ up 353, a gain there of 3.1%. 10-year down 8/30 seconds. The 10-year yield 3.01%. Spot gold up 0.2%, 17.11 the ounce. While West Texas Intermediate crude oil up today by 1.5%, 104.10 a barrel. So again, recapping, an earnings beat out of Netflix. Shares rallying now by 8%. The Dow, the S&P, and NASDAQ all surging today, with the S&P up by 2.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we're all in on Netflix this afternoon, the company reporting its latest results for its second quarter. Just moments ago, as you heard from Charlie, it was a beat on the bottom line, but revenue missed on the top line. The company also guided a little lower for the top line and bottom line for their current quarter than analysts did expect. Still, the company did say that they didn't lose as many customers as analysts had been concerned about. Shares now higher by about 8% in after hours. Let's get into it with John Swartz, senior reporter for Market Watch. John, this afternoon, joining us on the phone from San Francisco. John, good to have you with us this afternoon. You've had exactly 19 minutes to look at these results, so give us the takeaway in terms of what you're seeing.
I think you did a really good job of summarizing, Tim. I think what we're seeing here is probably, and what you probably are hearing, is an exhale from Hollywood and Las Vegas. Netflix did exceptionally well, not just for this quarter in terms of subscribers, but for the forecast. So if you do the math, it was anticipated they would lose 2 million this quarter, and they would gain about 1.4 million. Well, they're saying that, as you mentioned earlier, that the loss is only 970,000, and for the next quarter they're going to gain 1 million. So basically, it's a wash versus a deficit of roughly 600,000. And I think that is the big number going forward, because once you get past the third quarter, we get to the fourth quarter, which is traditionally their biggest quarter, where they should add at least 5 million. So I think you can rest now after 2 really bad quarters, including the first loss of subscribers in a decade. We now see it reversed, and maybe there's a couple of reasons for that.
And let's talk about sort of the ad-supported offering, because looking through it, the shareholder letter, it says that it will now be introduced around the early part of 2023. And I mean, Netflix had been, hinting at this for a while, but how big of a game changer would that be when we start finally getting details on that in earnings reports?
I think it's going to be really significant. I think the one thing that Netflix has not been able to overcome is this lack of an ad-sponsored platform. I think, in a sense, given the inflation and the fact that people are more cost-conscious, they probably are going to endure some advertising. And I think if Netflix charges $7 or $8 a month, at least one analyst has come out with some numbers that this would mean hundreds of millions of dollars for them per quarter. So in a sense, it gets them into that game. And it also kind of compete with the Disneys of the world, whether we have the advertising. And they all have these tiered models, and Netflix always kind of had its hand behind its back. Also, it was also kind of at the mercy of its schedule. I kind of want to mention that. So this whole idea of a split season of Stranger Things, I think, is incredibly significant, because what they did was they split the series between 2 quarters, basically April 30th and July 1st. So there's going to be an impact on not just one dump of the entire series in one day, but over a couple of quarters. And you can do that with popular programming.
What's so funny about that, John, is it goes against what they've said for years, right? Which is, you know, we're a platform that is so valuable, that brings so much value to a customer who, you know, used to pay $8 a month for it, that we can put all episodes of one single thing out at one time. And the traditional players like HBO balked at that.
Exactly. I mean, it was something they were, you know, actually when you look back at Netflix and what they've learned over the last several months is that they were dead set against advertising. They were not that open to sports programming, which we might see come to them. There's the whole advertising model. There's the split season approach. I mean, most other places do it weekly. Netflix thought it could do it a certain way. And I think Netflix can do the split season, but probably only with incredibly popular programming. You can't do that with everything, obviously.
Yeah.
But in the extent it diversifies what they're doing, the ad platform diversifies and gives you more options. I think they've come to the realization that there's just so much competition and the content is so deep everywhere else. They have to go halfway to the customer.
Let's talk a little bit about that, John, because we are getting a bit of news as we make our way through the document here. Netflix appears to be delaying the launch of that ad-supported offering just a little bit. Right. The shareholder letter now says it will be introduced around the early part of 2023. The company had previously said it would launch this year, though their language does give them a little bit of wiggle room on the start date. I brought this up with our Bloomberg intelligence analyst, Geeta Raghunathan, who I asked her about the idea of cannibalization here. So just in the last minute that we have with you, how concerned should Netflix be by people who pay full price right now, essentially trading down, especially in an inflationary environment, to a less expensive option? I mean, I'm sure it's better than quitting the service.
I think they've done the numbers. Right, exactly. So the churn rate is killing them. I'm sure they've done the numbers and figured that they can come out slightly ahead. But you're right, there is that danger of trading down. And the other thing that they did today, which didn't get a lot of traction, is they started the crackdown on shared accounts, and they're starting it in Latin America. So they're going to start charging extra if you try to add homes to your account. So they are taking these steps that they were loath to do. And you're right also, we all expected the ad model to happen by the end of the year. So that could hurt.
All right, John Swartz, we got to leave it there. Really appreciate you taking the time and joining us on this afternoon. We're going to let you get back. I know you got a lot of digging through this investor report to do. John Swartz, senior reporter at MarketWatch, joining us this afternoon on the phone from San Francisco.
And if you look at where Netflix is in the after hours, it's still up 8% or so. That has the company on path for its first post-earnings gain since January 2021. It's been a long time.
Okay, so what's remarkable about this, Katie, is that I look at the chart at GP on the Bloomberg terminal. It's still down from its November 21 highs of more than 70%.
Is that bad?
That's bad.
That's bad.
All right, much more Bloomberg Business Week coming up in just a couple of minutes. You're listening to Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you're listening to Bloomberg Business Week on Bloomberg Radio. I was at the Bloomberg Crypto Summit earlier today. You're going to hear all about it in just a couple of minutes. But first, let's get to Charlie Pellet for the latest news.
Hi, thank you very much. Big day, by the way, for Bitcoin today, surging 8.4%, and a big day after hours for Netflix, up now by roughly 8%. Netflix sees a return to growth after losing 1 million customers. Its quarterly loss of subscribers was smaller than the company forecast, with management now expecting 1 million new subscribers this period. Geetha Raghunathan is a media analyst with Bloomberg Intelligence.
They do have a lot of positives working in their favor. They are the largest streaming platform in the world. They do have 220 million subscribers across the globe, and they do have an average household spending over 2 hours per day on their platform. And that is what advertisers are looking for. They're looking for eyeballs, and they're looking for that constant engagement.
After hours, again, Netflix now up by just about 7.8%. Big day for the U.S. stock market. Best day in 3 weeks for the S&P 500 index. We had a broad-based rally. John Baranko is Chief Investment Officer of Fundamental Investments at Allspring Global Investments, and he was our guest right here on Bloomberg Business Week.
I think we're in a transition period here, and the market really is in need of evidence, really. And I think evidence that inflation is peaking, evidence that we're moving down a path of hopefully towards a soft landing relative to a recessionary outlook.
And again, today we had the S&P 500 index up 105 points, an advance of 2.8%. The Dow Jones Industrial Average up 754, up 2.4%. NASDAQ up 353, a gain of 3.1%. 10-year down 10/30 seconds, 10-year yield 3.02%. The 2-year 3.23%. Spot gold up 0.1%, 17.11 the ounce, while West Texas Intermediate crude was up 1.3% today to 103.95 a barrel. Recapping Netflix, its subscriber numbers coming in better than Wall Street had feared. Shares right now up by 7%. S&P up 105, up 2.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. As I said earlier today, I was at the Bloomberg Crypto Summit downtown in Manhattan. My panel was specifically on the fight to greenify cryptos. I spoke with Brittany Kaiser. She's the chair of the board of directors at Griffin Digital Mining. Also joining us was Chris Larson. He's the co-founder and executive chairman at Ripple. And in this tape, Brittany discusses whether greenifying right now is a priority for the mining industry, which is dealing with a lot. Take a listen. And Brittany, let's bring that question specifically to the miners, because obviously the mining industry has been under a lot of pain. And when you think about, the cost that it would take for some of these miners to switch to more renewable sources of energy, do you feel that momentum has been lost at this moment? Same question. Has it just fallen off the priority list?
It might have for some other companies that are struggling to stay afloat. I'm lucky that at Griffin Digital Mining, we have an incredible team that made sure that we had a business model where we would always be in the green and that we were not wasting any time or money or energy. But there are so many people in the industry that are now struggling to make ends meet and wondering whether they're going to have to sell or shutter their doors. And so in that situation, when renewable energy sites are actually raising prices these days, a lot of miners in the industry that do not have an ESG mandate, I'm sure, are just going to be choosing the cheapest options possible, whether or not that's using fossil fuels or renewables. It's just going to depend where their operations are. And of course, Griffin's lucky that we decided to start our company on green energy. If you started your company using any type of energy, the cost that it actually takes to move all of your machines to another site is probably not going to be a cost that you're going to choose to incur at this time.
All right, that was Brittany Kaiser of Griffin Digital Mining. I spoke to her earlier, Tim. That was in person. I was in person. She was not in person. We're still living in a hybrid world, but a really interesting conversation.
Yeah, and a really cool event, too. I mean,
Yeah.
we heard from Sam Bankman-Fried. We had a lot of
We
people
were
there
right
earlier
before
today.
his panel with Matt Levine, the two heaviest hitters out there. But I think we held our
Was he
own.
there in person, or was he?
He was there in person.
Because so often he does these things virtually.
I know, but no, he was in the flesh. I almost barreled into him coming off stage.
Was it because you were tweeting?
I was, racing to Twitter to see what the reception was like.
You know what's interesting and about this is the landscape that we find ourselves in when it comes to this crypto summit, right? We saw just $3 trillion was the market value just a few months ago of all crypto. And, at one point in June, it was sub $1 trillion.
Yeah.
So you had more than $2 trillion just evaporate
Yeah.
when it comes to wealth. What was the tone of, like, what you were, I know you weren't able to see the whole thing because you were on your
I had to
panel.
come
You had
back
you had to
for
come back for
this
this
show.
You were doing a lot. And the crypto panel, the crypto summit actually continued
Yeah.
into the afternoon. But how would you describe the tone there? Because it was an in-person thing, and I'm wondering how people are feeling about crypto right now.
It's not as downtrodden as you might think. I mean, because honestly, like, Bitcoin has been in the doldrums for a while now, and sort of a meme that comes about whenever the crypto industry is really going through it is it's time to build. But people really believe it. People really are saying that now is the time to really work on building out your team, refocusing on your core mission. It's not just about sort of what's the shiny object right now.
That's interesting. So is there this sense that's, kind of the wheat has been separated from the chaff at this point? And look, there are a lot of issues in terms of leverage and companies that we saw, crypto lenders that we saw file for bankruptcy and have down rounds just in the last few weeks. Is there this idea, though, that those left standing right now are going to be stronger coming out of this?
I think that is starting to become the case. I mean, if you think about sort of the contagion that we've seen that you just walked us through, and some of the high-profile stars, such as 3 Arrows Capital, coming to the ground, it feels like the shakeout has been very intense, and at least the hope in the industry is that we're at the tail end of it, because when you think about what dominoes there are left to fall, a lot of them have fallen.
You don't hear so much these days about companies starting to accept crypto the way, we were asking them a year ago when this was at, $50,000.
Such a tired conversation.
It is.
You tired?
Well,
Are you tired?
Yeah, that is a tired conversation, but the conversation, I think, continues about whether something is actually a currency if it's not denominated in that, right? Like,
what's gold, though?
Well, gold has utility because gold can be used. Gold can actually be used in watches and in electronics and stuff. So it's a commodity in that sense.
Yeah, but in terms of gold as a store of value, I mean, does that come from gold being finite,
Yes.
or does that come from gold being, I can use this in jewelry?
I would say both.
Okay, and
Yeah.
for Bitcoin, people would say, it's finite.
Because it's only finite. Where else do you use it?
Bitcoin?
Yeah.
No, I'm talking about the total supply of Bitcoin that will ever be mined.
Yeah.
Yeah.
21 million.
I know. So it seems like we're on the same page here.
We are. This
Okay.
is worth a bigger
But would you
conversation, I
pay
think.
for anything with gold? No.
No, not in this day and age.
No. Maybe
All
in
right.
the Stone Age.
We got to go, Katie. You're listening to a Bloomberg Business Week, and this is Bloomberg Radio. Let's get to Washington, D.C. for a check latest world and national news for Nancy Lyons. Hey, Nancy.
Thanks, Tim. Russian President Vladimir Putin is receiving staunch support from Iran for his country's military campaign in Ukraine, with Iranian leaders saying the West opposes an independent and strong Russia. Meanwhile, National Security Council spokesman John Kirby is confirming Russia is opening up banks in the parts of Ukraine it now controls and has even introduced the ruble as currency in those areas.
We have information today, including from downgraded intelligence, that we're able to share with you about how Russia is laying the groundwork to annex Ukrainian territory that it controls in direct violation of Ukraine's sovereignty.
Kirby says Russia is also said to be trying to take control of broadcast towers and is forcing Ukrainian residents to apply for citizenship. President Biden has issued an executive order aimed at punishing countries that kidnap or wrongfully detain U.S. citizens. Bloomberg's Nathan Hager has more from Washington.
The order directs the Secretary of State to identify foreign government officials or non-state actors who are involved in detentions, either directly or indirectly, so they can be targeted for consequences, including sanctions. The order also creates a new travel warning, D, for countries where Americans could be at risk of wrongful detention. The Biden administration's under pressure to do more on this after Russia arrested WNBA star Brittany Griner in February and accused her of trying to import hash oil through vape cartridges she was caught with at the Moscow airport. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio. The conversation about crypto continues, Katie, because earlier today, Mike Novogratz, the billionaire and investor who once called himself the, quote, Forrest Gump of Bitcoin, said the recent turbulence in the crypto industry is a, quote, full-fledged credit crisis, and acknowledged that he was darn wrong about the magnitude of the leverage in the system.
You know what else he was darn wrong about?
Terra?
Yeah, that was a big one. But in terms of...
Wait, explain what that is, because...
You want to do this again? The algorithmic stablecoin that just
we can't just mention what Terra is.
Imploded.
And also, I can't explain it. You have to explain it.
I'm just going to call it an algorithmic stablecoin that completely imploded. Novogratz was a big backer of the Luna Foundation and of Terra, and that went spectacularly wrong in May. And in terms of all of the dominoes that we were just talking about, that was one of the biggest and the earliest to fall.
One thing that I'm still trying to wrap my head around is connecting that domino falling to the broader crisis that led to the fall in the price of Bitcoin, which ultimately led to the liquidation.
I think that's when you started to get concerned.
Three Arrows Capital.
Yeah. Well, I think that's when you started to get concerns about the market structure of crypto, that that Terra implosion. And also Three Arrows Capital, they were also involved in Terra, and they just had a series of extremely wrong way bets, and Terra was one of them.
Earlier, I mentioned a couple of the lenders who found themselves connected to Three Arrows Capital. Those include companies like BlockFi, which just a few months ago was valued in the billions of dollars.
And just a few months ago, you were in conversation with BlockFi.
Yeah, I talked to Zach Prince, the CEO and founder of that company, a few months ago. And then also Voyager Digital filing for bankruptcy. And then even a company like blockchain.com found itself exposed.
Yeah. It just goes to show how interconnected the crypto world is. It feels like the tide has come out. Now we can see just how linked everything is.
So how linked is it?
Super linked. I mean, everyone is exposed to each other, and we'll see how that changes going forward.
All right, check out the Novogratz coverage on the Bloomberg Terminal and Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Netflix's loss was less than what Wall Street had been expecting in terms of paid streaming subscribers. Netflix shares after hours, they're up now by about 6.7%. Netflix sees a return to growth after a 1 million customer loss. Stocks rallied today, surging in a broad-based rally with the S&P up 105 points, higher by about 2.8%. Indeed, we saw stocks gain into the close. The Dow was up 754, up 2.4%. NASDAQ up 353. That was a gain of 3.1%. Tendered on 10/30 seconds, 10-year yield 3.02%. Spot gold today up 0.1%. 17.11 the ounce on gold. West Texas Intermediate crude up 1.2%. 103.80 a barrel on WTI. So again, recapping, Netflix after hours up now by about 6.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, companies last year defied the pandemic to go public at a record pace. Fast forward to this year, things look quite a bit different. We've got market volatility, we've got inflation, and fears of a downturn that brought an abrupt end to the listing party. Check these numbers out, Katie. Companies have raised a combined $4.9 billion via U.S. IPOs this year, less than 6% of the record sum raised in the first half of 2021. That's according to data compiled by Bloomberg. So there's been quite a drought. Rachel Gehring is IPO leader at EY Americas. Rachel joins us on the phone from Nashville, Tennessee. Rachel, how are you?
I'm great. Thank you.
Well, it's good to have you with us. What do you make of the downturn that we've seen in IPOs this year? When does it turn around?
Well, that's a great question. We are definitely in a wait-and-see period right now by both companies and issuers for all the reasons you just mentioned, right? Rising interest rates, inflation, supply chain disruptions, continued workforce disruptions and access to talent. We've got valuations kind of correcting themselves from the highs of 2021. And then, the overall performance of the 21 IPO class is far below the overall market. So that doesn't bode well, and why we're seeing kind of that pause right now that we're experiencing and companies preparing on the sidelines. I think moving forward, we're going to see new issuers come to market that have both a strong growth and profitability story.
And Rachel, is it fair to say that there's companies in the pipeline, in the IPO pipeline, but they're just waiting out the market conditions?
Absolutely. I think there's a lot of companies who still have a strong interest in IPOs. It's not a matter of if, it's just a matter of when. So they're navigating through these uncharted waters currently, and also waiting for investors to be back interested in this asset class. As investors have been really challenging their own portfolios, rebalancing, looking to more defensive sectors. So companies are preparing, and that's where my optimism comes into play. We're having conversations with companies on a daily basis that are still interested in an IPO, whether that's this year or into 2023.
What kind of IPO? What kind of IPO are they interested in? Are they interested in a direct listing? Are they interested in, when we saw Slack do that, which has since been acquired by Salesforce? Or are they interested in a traditional IPO? And, let's save the SPAC conversation for a few minutes down the line too.
Yep. So I think we're going to continue seeing the numbers largely in traditional IPOs. There's an interest in direct listings. More conversations are occurring from companies around that. It's still, not necessarily the most tried and true path, if you will. But with that option to raise capital alongside a direct listing, no one's yet done it before. We need somebody to take that plunge, if you will.
And let's go right to SPACs now. Tim teased it. Is that over? Was that just like a brief, sweet dream where SPACs were really awesome and everyone did them, and now it's over?
We don't think so. SPACs have been around for decades. Certainly caught a lot of attention late 2020 and 2021. So I think they have staying power. there's obviously, not only the general market dynamics that are impacting everybody and even the traditional IPOs that we mentioned, but what's also impacting SPACs is the uncertainty around regulation. So more certainty around that regulation coming from the SEC and otherwise needs to occur for then all of the stakeholders in a SPAC, for SPAC sponsors and underwriters and so forth to be able to respond and adapt. But I think they will respond and adapt. And will we see highs like we did in 2021? Probably not. But do they go away completely? I don't think so.
Rachel, can you give us some insight into the type of work that you do as IPO leader for EY Americas? What are the companies you work for and work with?
We work with companies across all sectors, private companies that are looking to go public, advising them through not only the IPO process and what to expect, but also, I think equally important, the public company readiness component. These organizations, as a private company, they've been focused on growth. They've been focused on their customers and their business as they should be. Now, as you transition to a public company, you really need to have broader functional areas built out with a strong degree of discipline. We help advise companies through that whole path in making sure not only they're ready for the IPO transaction, but then also being a successful public company on the backside of that, and how will they, perform and respond, and are they prepared for the demands of being a public company?
Maybe this is a wild card, but have we seen sort of the reverse? Have we seen any noticeable uptick in companies going private, leaving the public markets?
I don't think we've seen so much a trend as of yet. There's certainly situations where that's occurring in any year for a variety of reasons. I don't know that we've seen enough information, though, to indicate a trend in this moment.
So if we think about what the remainder of 2022 looks like and going into 2023, if there is indeed a downturn, if we start to see companies really pull back on hiring, if we see a recession, what does that mean for the work that you do at EY?
I don't think it really changes a lot because companies will need to continue, as they're navigating those waters, they're going to continue challenging the efficiency of their business and how it's run, as well as the discipline. And that's where we really can provide a lot of value to organizations as they shore up, whether it's how they leverage technology, how they think about their talent and their workforce, the geographies in which they're operating in, and trying in identifying where efficiencies can be gained so that they can be a stronger company coming out of this market downturn.
And I don't know, something we talk about often in the context of the past 2 years we had is that you saw a lot of demand pulled forward for a lot of companies. And we only have about 40 seconds here, but I'm curious, how much of the slowdown we're seeing right now is just because we had so many companies go public already?
That is a great point, and I think we are seeing that. There are companies who really took advantage of the valuations in the market of 2021, so they pulled forward, they accelerated. So I think that is something that we are seeing right now, particularly when you look at what did and didn't happen in the first quarter and into the second quarter. But certainly the overall market dynamics are also impacting a lot of companies and their plans.
Rachel Gehring, IPO leader at EY Americas. Rachel, thanks so much for taking the time talking to us all about the IPO market this year and what to look for in the remainder of the year. Katie, thank you for covering for Carol Nassar today.
This was a blast.
It was a blast. We had a good time.
It's
a great program this afternoon.
Absolutely.
Well, thank you all for listening as well. We appreciate you tuning in this afternoon. A big thank you to our team that makes it happen here at Bloomberg Radio. Stay tuned for Sound On coming up in just a couple of minutes. This is Bloomberg Radio.